Hi everyone, it's Vanovermeire with Coldwell Banker Mountain Central coming to you with your real estate market update for March 2020. And of course, everyone's asking me what is going on because of the coronavirus, and I will get into that in just a moment. But let me just address this. If you are currently on the market selling your home, we are asking people if they will just leave all the lights on and leave all the doors open so nobody really has to touch anything. Generally speaking, buyers don't like touching things anyway, but this way it's just that much easier just to walk in and walk out. I will tell you, as an industry, I've been on our private Facebook page. Real estate agents are very mindful of this. We're asking buyers before we meet with them, if they've traveled or if they've been around anyone that's sick. So we're making sure to do our due diligence around that. I think for real estate, the good news is we're not in large gatherings, so we're more one-on-one. So there's a lot less risk for us with the coronavirus, and that is the reason why I think the real estate business is continuing to move forward. That and the fact that interest rates have become very attractive, and we've seen buyers coming into the market and taking advantage of these low interest rates, and that's fueled the real estate business despite the whole situation with the coronavirus and the economy. And I think we're all hoping this is short-lived, but people are definitely taking advantage of this. So let's just take a look at some of the stats for February. You can see our absorption rate is better than it was a year ago. For the month of February, we were at 25.96% as opposed to the month of February a year ago, which was 19.85%. So that's quite a significant increase year over year for the month of February. Our benchmark price is $479,100. From February last year to February this year, we're in better shape if you just compare the 2 months. If you look at the overall market, we're actually down from 2019, where we finished up at 484,808, and we're at 479. So prices have continued to soften a little bit. But if we continue to see more sales and less inventory, I think we're due to see that prices might actually level off or maybe even slightly increase this year, which I think is probably going to happen. Here is the hard numbers for February in the detached sector. 685 sales out of 2,639 listings. So it is definitely still a buyer's market, but you can see that again is up from February of 2019. And we saw inventory levels that are lower and sales that are higher. So for the month of February compared to the month of February in 2019. So we are going in the right direction. Our average days on market is 53, which is also not too bad considering that it's still a buyer's market. And here's our market distribution to get an idea of what price ranges seem to be doing the best. And you can see that 400 to 500 has taken over, and that is now 30% of the market. And in the previous last year, it was in the 300 to 400 range, but this is where the most action is. But if you really look at our detached sector, there are a lot of houses for sale in the 400 to 500 range, and that's a very affordable position for people to be in. But if you look at the move-ups, the 600 to 700 at 7%, 700 to 800 at just over 5%, these are all quite positive numbers. I think even the 1.5 or 1 million to 1.5 price range seems to be still doing pretty decent compared to what's going out there in the market. A lot of times people think, oh, those luxury real estate houses are probably not moving very well at all. The fact is they are, and part of it is the interest rates, and part of it is that some of these prices have also come down. So there's buyers looking at that and going, this is an opportunity. And quite frankly, I think they're right. This is an opportunity. And I think everybody should pay attention to that that's looking at buying. There is an opportunity here. This is getting into the attached properties. And you can see the absorption rate here drops down at 21.29%. We're still seeing attached properties that are condos not to be in as high demand as we'd like them to be. the attached properties that are not condos seem to be in higher demand. But look over the year over year. I mean, February was only 14.65% a year ago, and we're up at 21.29. So that's really positive. Benchmark price of 310, and you can see slightly down from February last year. And the fact that 2019 finished up at 314, we're slightly down from there as well. There's a big drop here. I mean, you can see in 2014 it was 411. So I mean, this market, like I said, especially those attached properties in the inner city, this is where you see the most significant price drops. Is that so many of them are down $100,000 from where they were at the peak. And here we're getting into the numbers showing just how many sold in the month of February. 303 out of 1,423. So compared to February of 2019, which was at 234 sales, we're at 303, all heading in the right direction. Inventory levels down a little bit here too at 1,423 compared to 1,597. So this is the direction we want to see it. 60 days on the market on average. From a year ago it was 61, so that's relatively the same. And you can see on the attached sector, there were 29% is in that 300 to 400,000 range. But still pretty strong in the infill market. I mean, when you look at that 600 to 700,000 range in the infill, and I have noticed, because I do a lot of stuff in the inner city too, I've noticed that there's quite a few now that were at 749 are now at 699, and those seem to be moving now. A lot of buyers are going, yeah, at 699, 679, somewhere in there. That makes sense to get into a nice attached property in the inner city. And I think that that's where things will probably bottom out, but that's an opportunity because some of those houses, those attached properties, they were as high as 850, and some of them are down as low as 700,000 now. So there's definitely an opportunity there. Here we're getting into the apartment condo market, 14.59% absorption rate. So that's still not a high demand sector of the real estate market. Although, again, it's better, 11.45% absorption rate a year ago, 14.59 this year. Prices at 244,700 compared to 252,300. So we're still seeing softening there. And you can see this is where we came from. We had a peak of 291. Now we're at 243. So it's not still going in the right direction when it comes to apartment condos, but we continue to have more inventory than we need. But as I've mentioned in previous videos, at least we're getting buildings now that are becoming rentals. But what's very interesting about the rental market is the rental prices are increasing. And I find that very interesting that in a market like we're in, that rental prices are going up. And I think if you raise them enough, there will be more people that might go, hey, my rent is costing me more than it would cost me per month to own with these low interest rates. Maybe we should just buy. And whenever those number ratios between rent and owning become the same or better, then more people start to buy. We had 209 sales out of 1,432 active listings. That's up from 149 in February of last year. 1,432 active listings compared to 1,301. So there's more inventory than a year ago in the apartment sector. 62 days on the market versus 71. What I am finding the hardest part of this market for apartments to sell right now are these older buildings that were built in the 70s and early 80s. Because there's just so many newer buildings that are available and they're all around the same area. And that's putting a lot of downward pressure when you're a buyer and go, hey, I could buy in a building that was built in the last 2, 3, 4 years for around the same price and have floor-to-ceiling windows, modern-looking appliances, modern-looking kitchen cupboards and flooring, as opposed to the old brick building I think I'm going to head over to something that's newer, and that's definitely put an extra pressure on some of these older buildings. This sector, clearly the 200 to 300 range is quite popular, but amazingly enough, look at the condos under $199,000, and we've never seen that before for quite a while. To see there's a demand in picking these things up for under $200,000, and there's a lot of one bedrooms, a lot of newer one bedrooms you can get into for that price range. So let's just wrap up and see what's happened from March 1st to March 16th. And this is updated today, and you can see since the coronavirus has hit in March, we've still done as a market 665 sales, which is actually more than we did in 2019. So that tells you the interest rate drop is definitely bringing people into the market despite the coronavirus. We have new listings of 1,595, only up slightly from last year. Active listings were at 6,075, so we're down 5% from last year. Our median price is slightly down at $415,000. Our average price is also down at $467,899. So that's holding, though, relatively close to where we were a year ago. Look at the pending sales. 75 are conditionally sold as opposed to 58 this time last year. I mean, that's an increase of 29%, and the days on market has dropped. So our annual sales to date right now, we're actually up 12.19%. This market is doing better than a year ago despite the coronavirus. So I think despite the uncertainty and despite the craziness of what's going on, real estate seems to be something to take a good look at, whether you're selling right now or whether you're buying. This is maybe a time to be looking at either being on the market or perhaps if you're a buyer, taking advantage of what is going on in the market right now. So as always, if you want more detailed information on a specific community, I will say again, as I always do, there are pockets within Calgary that are doing even better. Certain neighborhoods are doing better. Just to give you one example, I listed a house recently in Signal Hill. I've had over 40 showings in like 11 days. Really, really high demand area. So, that area has held its value a little more. There just seems to be a higher demand in that specific area. These are the things that we have to look for very specifically when we're analyzing where the market is for each property. So hope that was helpful. Reach out to me if you have any further questions. I love hearing from you when you do have further questions, or if you want to get a more detailed analysis of your home, or if you're a buyer just trying to figure out, is this the right time? Yeah, just reach out to me for a conversation. I don't mind providing all the information that you need. Thanks, and have yourself a great month.